Assalamualaikum and good day, Doctor. Today we will look into the financial performance of two major companies in the Malaysian healthcare sector. Let's talk about why financial management is so important. It plays a strategic role in any business because it is vital for long-term planning and making sure a business can survive and thrive in the future. Remember, looking at net profit alone is not enough to measure success. We need a proper performance analysis to understand how well a company uses its asset and manage its capital to maximize wealth for its shareholder. Now, let's look at the Malaysian healthcare sector itself. This industry is currently experiencing exponential growth, which is driven by three main factors, which is an aging population, rising disposable income, and increasing health awareness among Malaysians. On top of that, medical tourism is booming. Malaysia is known as a premier regional destination for healthcare, which has significantly boosted our private healthcare market. To keep up with his fast growth, the sector relies heavily on continuous capital investment and high operational efficiency. Next, let's introduce the two rival companies we are analyzing today, which are KPJ Healthcare Berhad and IHH Healthcare Berhad. First, we have KPJ Healthcare Berhad. Established in 1981, KPJ opened its very first specialist hospital in Johor Bahru and was later listed on the stock exchange in 1994. Today, it serves as the healthcare arm of the Johor Corporation. KPJ operates a wide and strong network of specialist hospitals both here in Malaysia and overseas, with a deep commitment to clinical excellence and innovative service to meet society's evolving needs. On the other side, we have IHH Healthcare Berhad. Established later in 2010 and headquartered in Kuala Lumpur, IHH has grown rapidly to become one of the largest healthcare providers in the world. They manage premium, well-known healthcare brands that you might recognize, such as Gleneagles, Pantai, Mount Elizabeth, and Prince Court. IHH has a massive global presence operating in Singapore, India, Turkey, and China, with a strong focus on specialist high-end care.
Assalamualaikum and good day everyone. My name is Natika Najwa binti Muhammad Syukur, matrix number 313554. Today I will present the data collection part of our financial management project. For this task, we obtained the annual financial statement of KPJ Healthcare Berhad and IHH Healthcare Berhad covering the years 2021 until 2024. The focus is on the balance sheet and income statement, which provide the foundation for our later analysis, including DuPont and financial ratios. For KPJ Healthcare, the balance sheet shows steady growth. Total assets increased from about RM6.90 billion in 2021 to RM7.40 billion in 2024. Equity also rose from RM2.25 billion to 2.74 billion, while liabilities stayed fairly stable around RM3.9 billion to RM4.6 billion. Looking at the income statement, revenue grew from RM2.63 billion in 2021 to RM3.92 billion in 2024. Net profit improved significantly, moving from RM65.7 million to RM407.2 million. This shows consistent upward performance. For IHH Healthcare, the balance sheet reflects a much larger scale. Assets grew from RM45.5 billion in 2021 to RM56.8 billion in 2024. Equity increased from RM27.3 billion to RM30.9 billion, while liabilities range between RM17.8 billion and RM22.9 billion. On the income statement, revenue expanded from RM17.1 billion in 2021 to RM24.4 billion in 2024. Net profit fluctuated more compared to KPJ. It was RM2.18 billion in 2021, dropped in 2022, peaked at RM3.39 billion in 2023, and slightly eased to RM3.16 billion in 2024. From these statements, we collected the key figures needed for analysis. The first one is revenue for profitability and efficiency ratios. The next one is net profit for margins and return on equity. Then total assets for asset turnovers and return on assets. Total equity for leverage and ROE. And the last one is total liabilities for debt ratios. These datasets provide all the inputs required for the DuPont analysis and other financial ratios, which will be discussed in the next sections. Let's look at the balance sheet overview first. For KPJ Healthcare Berhad, assets grew from RM 6.90 billion in 2021 to RM 7.40 billion in 2024. Equity increased from RM 2.25 billion to RM 2.74 billion, while liabilities stayed stable around RM 3.9 billion to RM 4.7 billion. For IHH Healthcare Berhad, assets rose from RM 45.51 billion in 2021 to RM 56.76 billion in 2024. Equity grew from RM 27.28 billion to RM 33.91 billion, while liabilities ranging around RM 18.23 billion and RM 22.85 billion. Now for the income statement overview, KPJ's revenue increased from RM 2.63 billion in 2021 to RM 3.92 billion in 2024, while net profit rose from RM 65.7 million to RM 407.2 million. IHH revenue expanded from RM 17.13 billion in 2021 to RM 24.38 billion in 2024. Net profit fluctuated starting at RM 2.18 billion, dipping in 2022, peaking at RM 3.39 billion in 2023, and easing to RM 3.16 billion in 2024. Overall, KPJ shows steady growth while IHH reflects larger scale operations but with more volatility. In summary, KPJ Healthcare shows steady growth in both assets and profitability, while IHH Healthcare operates on a much larger scale but with more volatility in the net profit. These findings set the stage for our DuPont analysis industry, where we will break down return on equity into its components and interpret the performance for both companies.
Hello, Doctor. My name is Nurin Zahira, number metric 313614. Next, I will discuss the DuPont analysis for KPJ Healthcare Berhad. Based on the graph, net profit margin increased significantly from 2.53% in 2021 to 10.38% in 2024, showing improved profitability. Asset turnover also increased from 0.42 to 0.54, indicate the company became more efficient in utilizing its assets to generate revenue. Meanwhile, the equity multiplier remained relatively stable through the period. As a result, KPJ's return on equity increased from 2.94% to 15.58%, reflecting stronger overall financial performance. The graph shows the DuPont analysis for IHH Healthcare Berhad. Net profit margin fluctuated during the 4-year period, decreasing in 2022, increasing sharply in 2023, and declining slightly in 2024. Asset turnover showed a gradual improvement from 0.38 to 0.46, indicating better asset utilization. The equity multiplier remained relatively stable between 1.60 and 1.67. Consequently, ROE also fluctuated through the period, reaching its highest level of 10.89% in 2023. In summary, both companies demonstrate positive financial performance. KPJ showed consistent improvement in profitability, asset utilization, and ROE through the period. On the other hand, IHH maintained a higher net profit margin compared to KPJ and a stable financing structure. Although its ROE fluctuated over the years, these findings indicate that both companies remain financially strong, but KPJ recorded a more consistent upward trend during the period under review.
Let's move to comparison of return on equity, or we know it as ROE, between KPJ Healthcare Berhad and IHH Healthcare Berhad from 2021 to 2024. ROE measures how effectively a company generates profit from shareholder equity. In 2021, IHH Healthcare Berhad recorded a highest ROE of 8.01% compared to KPJ Healthcare Berhad at 2.94%. However, KPJ demonstrated consistent improvement throughout the 4-year period. Its ROE increased steadily from 2.94% in 2021 to 15.58% in 2024. On the other hand, IHH ROE fluctuates over the years. It declined to 5.80% in 2022 and then increases to 10.89% in 2023. and then it decreases slightly to 9.61% in 2024. Overall, KPJ Healthcare Berhad showed a stronger upward trend in ROE, indicating improvement profitability and better efficiency in generating return for shareholders. Therefore, based on the ROE analysis, KPJ demonstrated stronger financial performance than IHH during the period under reviews. Next, I'm going to explain the factor influencing ROE using the dew-point analysis, which is consisting of the net profit margin, asset turnover, and equity multiplier. First, KPJ Healthcare net profit margin increased significantly from 2.53% in 2021 to 10.38% in 2024, showing improved profitability. Although IHH maintained a higher profit margin overall, but its performance was relatively stable. Second, KPJ improved its asset turnover from 0.42 to 0.54, indicating a better efficiency in using assets to generate revenue. IHH also improved, but a slower rate. Finally, KPJ equity multiplier remains stable, while IHH maintained a lower leverage, reflecting a more conservative financing structure. Overall, KPJ's strong ROE growth was mainly driven by improvement in profitability and asset efficiency, where IHH ROE fluctuations were largely influenced by change in profit margin. Based on the dew-point analysis, KPJ Healthcare Berhad demonstrated a stronger financial performance during the period from 2021 to 2024. Although IHH Healthcare generated a higher revenue and profit due to large scale of the operation, KPJ achieved a better growth in ROE. The consistent improvement in net profit margin and asset turnover contribute to KPJ ROE increases to 15.58% in 2024, which was higher than IHH, which is 9.61%. This indicates that KPJ utilized its asset and shareholder equity more efficiently. Therefore, KPJ can be considered the stronger performer in terms of the financial efficiency and shareholder value creation during the analysis period. That's all from me.
Now, let's move on to the core financial analysis, starting with liquidity. This basically measures how easily both companies can settle their short-term bill. If you look at the slide, we have the current ratio and quick ratio. Notice the clear contrast here. KPJ is showing a fantastic upward trend from 2022 to 2024. Their numbers are improving year on year, meaning they are becoming much safer and more capable of handling immediate debt. On the other hand, look at IHH Healthcare Berhad. Their ratios are dropping quite sharply, falling to just 0.72 for the current ratio by 2024. This happened because their short-term liabilities grew too fast. So, in terms of immediate cash comfort, KPJ is clearly in a much healthier position. Next, let's go a bit deeper with the cash ratio and net working capital. The cash ratio is the ultimate safety test because it only looks at actual cash. Once again, KPJ performed better. Their cash cushion peaked in 2023 and stabilized beautifully in 2024. But look at IHH, their cash reserve completely plummeted, leaving them with very weak instant liquidity by 2024. We see the exact same pattern in net working capital to total asset. KPJ made a strong recovery, jumping from negative territory in 2022 into a solid positive buffer. IHH unfortunately did the exact opposite. Their capital structure deteriorated and fell into the negative zone. This tells us that IHH short-term obligations are heavily outpacing their asset. And lastly, the interval measure, which is basically the operational runway on how many days the company can survive on its current liquid asset if revenue suddenly stops. Even though both companies saw a drop due to rising daily costs, KPJ proved to be way more resilient. By the end of 2024, KPJ still holds a solid runway of about 178 days. Compare that to IHH, which dropped sharply to just 130 days because of a huge surge in their expenses. To wrap up the liquidity part, KPJ wins hands down. They have a cash runway that is nearly 48 days longer than IHH, making them far more secure against financial shock.
I will explain the company's profitability ratios, which are the gross profit margin and net profit margin. Starting with the gross profit margin, it increased from 40.86% in 2022 to 41.88% in 2023 and further to 44.75% in 2024. This consistent improvement indicates that the company became more efficient in controlling its direct operating costs while generating higher revenue. It also suggests stronger pricing strategies and better operational efficiency, allowing the company to retain more revenue as gross profit. Moving on to the net profit margin, it also showed a positive trend, increasing from 6.37% in 2022 to 7.91% in 2023 and reaching 10.38% in 2024. This means the company earned a higher net profit from every ringgit of revenue. The improvement reflects effective expense management, higher revenue growth, and stronger overall financial performance. The significant increase in 2024 indicates that the company's earnings grew faster than its revenue. Next, I will explain the company's profitability ratios, namely the return on asset and return on equity. Starting with ROA, the ratio increased from 2.61% in 2022 to 3.73% in 2023 and further to 5.5% in 2024. This steady increase indicates that KPJ Healthcare Berhad became more efficient in using its asset to generate profit. Moving on to ROE, the ratio also shows significant improvement, rising from 8.2% in 2022 to 11.35% in 2023 and reaching 16.05% in 2024. This increase was mainly driven by strong growth in net profit, which outpaced the growth in shareholders' equity, indicating effective financial management and enhanced profitability. Overall, the continuous improvement in both ROA and ROE shows that KPJ Healthcare Berhad has become more efficient in utilizing its resource while delivering greater value to its shareholder. I will discuss IHH Healthcare profitability ratio, which are the gross profit margin and net profit margin. Starting with the gross profit margin, it was 34.31% in 2022, decreased slightly to 30.75% in 2023, and improved to 34.13% in 2024. Overall, the margin remained stable at around 34% throughout the 3 years. This indicates that IHH Healthcare consistently managed its direct operating costs while generating revenue. Moving on to the net profit margin, the ratio increased significantly from 9.15% in 2022 to 16.19% in 2023, reflecting a substantial improvement in overall profitability. This suggests that the company managed its operating expenses, finance costs, and taxes more efficiently while generating higher earnings. In 2024, the margin declined to 12.97%, but it remains well above the 2022 level. The decrease may have been caused by higher operating. I will explain IHH Healthcare return on asset and return on equity. Starting with ROA, the ratio increased from 3.39% in 2022 to 6.76% in 2023, showing that the company became much more efficient in generating profit from its total asset. In 2024, ROA declined slightly to 5.57% due to lower net profit relative to the increase in total assets. However, despite this decline, the 2024 ROA remained higher than the 2022 level, indicating that IHH Healthcare continued to utilize its asset effectively. Moving on to ROE, the ratio almost doubled from 5.64% in 2022 to 10.48% in 2023, demonstrating a significant improvement in the company's ability to generate returns for its shareholders. In 2024, ROE decreased slightly to 9.33%, mainly because net profit declined while shareholders' equity continued to increase. To conclude, based on the financial ratio analysis from 2022 to 2024, KPJ Healthcare Berhad shows significant improvement in its overall financial performance. The company strengthened its liquidity position, improved profitability, and became more efficient in managing its operation. Higher gross and net profit margin together with improved ROA and ROE indicates that KPJ effectively utilized its assets and generate greater returns for its shareholders. On the other hand, IHH Healthcare Berhad continued to demonstrate strong profitability throughout the 3-year period. However, its liquidity ratio declined consistently, indicating reduced short-term financial flexibility. Although profitability remained healthy, the slight decline in 2024 suggests that the company should pay closer attention to managing its operation costs and liquidity. Based on the financial analysis, several recommendations can be made for both companies. For KPJ Healthcare Berhad, the company should continue strengthening its financial position by maintaining effective working capital management and controlling operating costs. It should also continue investing in healthcare facilities, digital healthcare service, and operational improvements to sustain its profitability and enhance shareholder value. Maintaining adequate cash reserve will also help the company manage future uncertainties and support its expansion plans. For IHH Healthcare Berhad, management should focus on improving liquidity by strengthening cash flow management, reducing short-term liabilities where possible, and maintaining sufficient liquid assets. Although the company remains profitability, improving its liquidity will reduce financial risk and strengthen its ability to meet short-term obligations. In addition, IHH should continue improving cost, efficiency, and operational performance to maintain its profitability.